what is market geometry, guys? So market geometry, simply in the Forex, terms, it refers to a trading style that uses geometric patterns, which we're going to look at today. So the geometric patterns that we look at today, one in particular called the crab pattern, we will use these patterns to find an ideal setup in the market. Okay, so you can look at patterns as in various ways. You can look at them as support and resistance zones. You can look at them as key points of rejection, entry, etc. So we'll get into all of that today. Like I mentioned in particular, we're going to be looking at the crab pattern today. So I'm just going to break down. First of all, I'm going to break down what a crab pattern is. What the key points that you should be looking for, and then I'm going to explain the tools we use to look for the geometric patterns, and then we're going to go on to Monara, and we're actually going to look for a few trades ourselves. If we don't find any today, no problem. We don't force setups. We look for the perfect. There's no such thing as a perfect setup, but we look for an ideal setup to get into, which is, has a high possibility of playing out. Okay, I hope that makes sense for everyone. So like I said, there are many geometric patterns. There are many harmonic patterns within the Forex market on the charts. So far, we've already been through the bat pattern. We've already been through the butterfly pattern as well. So if you want to check those videos out, again, they are on the YouTube channel, which I can, if somebody can remind me, I can post it in the chat at the end. Again, today we will be looking at the crab pattern itself. So we will be going through that. And in the following sessions, we will continue with the rest of the patterns. Perfect. So when we look for our patterns, geometric patterns in general, whether that be the butterfly, bat, crab, it doesn't matter which pattern it is, we always need to start off with a certain tool, a particular tool, which is called the Fibonacci Retracement tool. Now, when we use the Fibonacci Retracement tool, for those of you that are not familiar with this tool, don't worry, I will explain it in this session. It essentially points out key zones, key levels for for price to react to. Okay, so what we want to do is when we start off looking for our patterns, we always want to look for a strong impulsive move to start the pattern. Okay, so from X, which is the beginning of the pattern, to A. Okay, so from low to high. Okay, so having said that, when you're looking for these patterns, again, you want to look for that strong impulsive move. And that ideally, the start of that, it just presents a more ideal pattern to get into, to play out from. Okay, so we start from X to A. The Fibonacci retracement tool, it's 100% to 0%. Okay, and then to find the B point, there's criteria in this pattern, right? So the first criteria to make this whole pattern valid, we must look for a retracement of price action from A, okay? And we would look for that to come down between the points of the percentage points of 38.2% and 61.8%, okay? So that's of the XA impulsive move, right? So if that don't make sense, I'm going to explain it again. So those percentages are percentages on the Fibonacci retracement tool. When we place this tool, we place it, if you can see here, from this X point, which will be the start of the move, right? So the low to the high, right? And that will be the A point. We're looking for point B to retrace between these two percentages. Okay, that's criteria one. Once criteria one has been met from B, we then look for criteria C. Okay, so criteria two, my apologies, so point C, right? So criteria two, point C must fall between 38.2% and 88.6% of A and B without closing past 61.8%. Okay, so again, I'm going to explain this again. So what we're looking for what we do next is we delete the Fibonacci retracement from X to A. So I would delete this to clear any clutter off of the chart, off of the pattern itself. And then what I would do is I would then place my Fibonacci retracement from A to B, okay? So from high to low, A to B, right? And then we are focusing on that point C, okay? We want ideally our point C to fall between 38.2% and 88.6%, okay? Without closing past this percentage here, 61.8%. Once this has been established, right, and the move to the next point is, has begun, we are going to look to get into the market at that point, okay? So we're going to delete this A to B Fibonacci retracement placement. We're going to delete that and we're going to look for point D now, okay? Now point D, the thing that makes a crab pattern, stick out, or for example, the main characteristic for a crab pattern is that long C to D move, right? Is the long sort of, if you want to call it a leg, right? That extension point. So what we're looking for in point D, so criteria 3A, it must extend to 661.8% of XA, right? So X to A, which again, X to A, we're placing the Fibonacci retracement tool from high to low. From low to high, my apologies, X to A, right? And then we're looking for that extension. So 100% to 0%, right? And then we're looking for the extension from C to D, okay? And then what we want to do, just to double confirm that, we move on to criteria 3B, okay? Now with 3B, what we're doing for point D is we're looking for the extension of AB now. So we want to delete our previous Fibonacci retracement tool, and we want to place it from high to low. I got that right this time, from high to low, okay? A to B, 100% up here to 0% down here, okay? And then what we're looking for that point D to, extend between that 224% and 361.8%, okay? These percentages might not make sense to you right now. If you write them down, I promise you they'll make sense further on in the session today, okay? So if you didn't catch any of that, I'm going to go over that again, so just bear with me. So once we've established point D, we are looking to enter at point D, okay? So we're entering the market at point D, okay? We're placing our stop loss below point D, right? With the stop loss, personally, with the stop loss and the target points, you're analyzing the whole of the market, right? So these are just sort of, how can I put this, sort of stencil, they're just stencil. It's just a stencil to say that, point B could be target 1, point A could be target 2, right? So they're not set in stone. You can adjust these accordingly. Like, for example, if price action does reach point 1, okay, target point 1, you are wanting to go for target point 2 at that point, and you only have one order open. What you'd want to do then is move your stop loss above entry, right? So you're securing the profit that you've already made, okay? So once it gets past target point 1, you can then also take partials as well, right? So you can go into your application that you're trading in, and you can take partials, okay? So that's just a bit of information about setting, a stop loss, entry, target points, right? Now, if you missed all of that, if you didn't get all of that, I'm just going to quickly show you again, right? So just to quickly recap on that, if you didn't catch the points, the percentages, you might want to write these down now or take a screenshot. It's entirely up to yourself. First, we start off by placing the Fibonacci retracement tool from X to A, okay? And we're looking for that strong impulsive move. We're waiting for criteria 1 for point B must retrace between 38.2% and 61.8% of XA, okay, of that Fibonacci retracement tool. Once we have point B, we delete the Fibonacci, and then we're looking for point C. We're placing the Fibonacci retracement tool from A to B, okay? So from this point to this point, and we're looking for these percentages for point C to fall between, never to close past 61.8, okay? Once we have point C, once we've confirmed that point, we delete the Fibonacci retracement, and then we place it from X to A again, and we're looking for 661.8% of XA. So we're looking for point D to push to that extension point. Okay, and then we're going to delete that, and then we're going to place it from A to B. Okay, and then we're looking for that extension again to fall between 224% and 361.8%. Once all of this criteria has been met, that is when the pattern is formed. Okay, without all of this, without criteria 1, 2, and 3 being met, the pattern will not form. Okay, it will not form on the charts. Now, one thing that I want to say that I personally started out, when I started out, I only knew one thing, right? I only knew how to trade Elliott waves, sorry. Now with Elliott waves, for me, they were quite simple, right? They were quite simple for me. So what I'm trying to get at here is when you're looking at these patterns, they might not make sense now. For me, when I was just trading Elliott waves, at the start, it did not make sense. Slowly, I got used to, waves, 0 to 1, the first wave, and then 2 to 3 being a retracement, and then 3 to 4 being an impulsive move, and then again, 4 to 5, etc. So they are, it might not make sense now, but again, once you've written all this down and you come to the charts, it'll all make sense. It'll all come to you. It'll be like second hand. It'll be second nature to you. So one thing I want to say about this pattern as well, all the geometric patterns, is we want to try and get to a point where we're seeing all of this form without, we need to make sure we place the Fibonacci retracement tool to confirm the criteria. But if we can see these without that, and then use that to confirm the pattern or the points, the criteria being met, then amazing. That's where I'm at now. That's the point that I'm at myself. I can, come to a point where I'm seeing the patterns form, and all I do is I'll place the retracement tool from X to A, confirm what B is, and then continue with the rest of the confirmations for this pattern. So is there any questions? Does anybody have any questions so far? I know that's a lot of information to take in. If you do have any questions, just pop them in the chat. I'll be glad to answer them. And then we can, we can all learn together while we're doing this. Because I don't want anybody to get, stuck on something and then, yeah, definitely practice makes perfect. When again, just to come back to the example of when I was trading Elliott waves, there was points where I would get to the 5th wave, the end of the pattern, and I wouldn't know what to do. Okay, so for example, this retracement, this pattern will be a correction, right? It's a correction, something called a correction in the market, right? So when you get an Elliott wave, it can be a part of a trend, and then after the Elliott wave, you do get a correctional pattern, right? So it could be a geometric pattern, for example, and that's when I was falling short, because I would get to the Elliott wave in an upward trend, and then I would keep placing buys. But little did I know, once I got to the end of the Elliott wave, you know, you had this consistently happening. You know, you can't keep placing buys with a bullish retracement, you know, crab retracement pattern. So if there's no questions, I'm going to move on to the next part. So we're just going to quickly jump onto the pattern itself now. I'm just going to make sure that everybody can see this. Yeah, perfect. So this is a pattern that I found in the live market. This is the Australian dollar against the USD. Okay. Perfect. So let's start off by placing our Fibonacci retracement tool. So just so I can, perfect. So I just want to make sure that everybody is paying attention. Okay. So when we are looking for the move, where will we be placing our Fibonacci retracement tool? So just to give everybody a hint, we are looking for a strong impulsive move to start off the pattern. So if everybody could just, you know, type in the chat if you know which points are we looking at. X to A, perfect. So we start from X to A, okay? So this is going to be our first placement. So just to clarify, in this pattern, okay, this is a bullish crab pattern, okay? And this is a bearish crab pattern, okay? It doesn't matter if it's bullish or bearish, we're still placing and we're still placing the Fibonacci retracement tool on these points that are clarified, and we're still looking for the same retracement percentages, okay? So you don't have to get confused about, you know, where you're placing it, which type of pattern it is or trend it is, okay? So from X to A, okay? Perfect. So just to clarify, the criteria for point B, where are we looking for point B to retrace to, or between, should I say? Can anybody answer that? Was anybody listening or making notes? Perfect. Perfect. Anybody else? Okay, so I'm just going to show everybody. So we have the points. Okay, so we're looking for point B to retrace between 38.2% and 61.8%. Okay, so I'm just going to go back to that. So you've got the percentage there, 38.2%. Okay, 61.8% right there. So you've got the retracement between that point. Okay, perfect. So now that we've established that this has been met, point B has been met, okay, now we're going to look for point C. We're going to confirm criteria number 2, okay? Now, I just want to quickly ask everybody what we are doing next. So what's the next step? It's very simple. It's a very simple step. It's nothing to do with percentages. To establish point B, we are, okay, I'm just going to help everyone again. So what we are doing is we're deleting the first placement and we are placing our Fibonacci retracement tool from point A to B, okay? So we delete the Fibonacci retracement tool and then we place it from A to B. So from here, point A to point B, okay? I'm just going to extend this so everybody can see a bit better. Okay, perfect. So point C, does anybody recall the percentages for point C? Where are we looking for it to land between? I'm going to help everyone with that so everybody can see point C. Point C, perfect. So point C must fall between 38.2% and 88.6%, okay? And never close past 61.8%. So 382 and 886. So we've got 382 here, okay? And we got 886 at this point here. So that's in between, okay? So it's in between these 2 points, okay? So now that we've established this point here, and it's never obviously pushed back past this point. So now that we've established this point here, point C, we're going to establish point D, right? So what are the requirements to establish point D? Where are we placing our Fibonacci retracement tool? If somebody can pop it in the chat, that would be perfect. X to A, amazing, perfect. So let's just confirm that, okay? So for point D, we're going to be placing the Fibonacci retracement tool from X to A, okay? 100% to 0%. So let's do that. So starting point X to A, perfect. Let me just adjust this a little bit. Doesn't have to be precise, but with this pattern, it's a bit in particular about how it panned out. Right, so now we are looking for criteria 3A, right? So we've made our placement for the Fibonacci tool. We're looking for it to extend to 661.8%, okay? So as you can see here, it did extend to this point, and didn't move past it, right? Now what we're going to do is we're going to look for the last criteria to be met, and then we can look to enter, right? So criteria 3B, point D must extend between these percentages from point A to B. So let's make that placement. So again, we're going to delete the Fibonacci retracement tool because we don't want too many tools on the chart. So again, it's from A to B. Okay. A to B. Sorry, is that right? Let me just triple confirm that. Okay. All right, okay, so let me just change the settings on this. My apologies. Perfect. And I just need to place in those two zones. So a quick little demonstration of the Fibonacci retracement tool. So once we place the tool, I'm going to show you my settings now for the tool itself. So this is how the layout is. I'm just going to explain a few things regarding the tool. So it starts off, the default for this tool, it starts off with a background, right? The reason I tick this box off, the reason I turn the background off, is because for me personally, it just clogs up the chart, right? And it makes it difficult to read the charts. And when you're, trying to analyze whichever pair you're trying to analyze, you want the charts to be as clean as possible, right? You don't want too many colors, you don't want too many lines, you just want to keep it as basic as possible, right? And then I have prices off. As you can see here, there's prices here as to where these levels are, these percentages. I have that off because I can just look like this at the price points. I don't need the price points to be on my Fibonacci retracement tool, again, to keep the chart as simple as possible. And then with the labels, the percentage points here, I have them on the right side instead of the left and the center. I just like it to be in this sort of plain area that I can see it clearly on the right side. And then for the actual values themselves, instead of them being on the top or the bottom, I just have them in the middle. Okay. And you can change the font size accordingly. You can change it to whatever you want. I keep it at 12. Perfect. And then we've got the values here. We do need to input some values, right? So the values that I choose personally, I have these values in because of the patterns that I look for, the type of patterns. It's not, I don't always look for crab patterns. That's why they're not in my values here. But obviously, if you do need to place these values in, if you are looking for particular patterns, I primarily look for the butterfly and the bat, and the Gartley as well. The Gartley's one of my favorite patterns. You'll have your favorite patterns that you'd like to trade, once you pick it up, and then you can, input the values and you don't need to change it. With regards to the lines themselves, sometimes they come multicolored. Again, I change them just to one color so it doesn't clog the chart up. And yeah, so I'm just going to quickly place these values in, these two values here. Okay, so we're looking for 224%. So let's just add that in. So the way you add these in is you just click on the button here, the tick. I'm just looking if that's already in there. I'm just going to quickly check if that's already in there. 224. No, it's not already there. So you can adjust these accordingly. So you can, for example, type in your values, right? So as you can see, it's just popped up there, and it will change that to match the rest. And I can turn this one off because I don't need it. So this button right here, you can just turn them off. And then we add the next value, which is 361.8. Is that in here? I don't believe it is. No. So we can just add that in here. So, okay. Let me just... And then just change that. 8. That's fine. Perfect. That's fine. And once you're done with that, you just click OK. Okay. Did I input that correctly? 361.8%. Okay. Let me just check this placement quickly. Okay, so let's delete this. So perfect. Okay, that's fine. Amazing. So once that placement's set, once you've input your values, then you're confirming point D. Okay. So once you've confirmed point D, then what I usually do is I'll have my Fibonacci tools in part already placed on the chart for point D. So as you can see here, there are two criteria for criteria 3. There's A and B. So I'll have both of these placements in, okay? And both of these placements I'll have ready for when price comes to these points, okay? And what we're looking for, everybody, well, most of us should already know this, right? So just to confirm with everybody, when we are looking for a break and retest on a certain price, what will we be looking for in regards to, I'll give everybody a hint, in regards to a candle, right? What we will be looking for in the candle for a break and retest. If anybody knows a closed candle, okay. Anybody else wants to throw some out there? Is it just a closed candle or anything else for a break and retest? So we need price. So once we've seen the close, that's the break. Perfect. So we need price to come back to that level, right? If we don't have a retest, we don't have an entry, right? So perfect. So what we're looking for here primarily is we're looking for that close, right? We're looking for that candle to close within these 2 points, okay? So we've got the close here, right? That's what makes this point valid. We've got the close right here, okay? Perfect. So then what you do at that point is, what we're doing is we're going to place our targets, right? We're going to enter. I'm going to delete this. So we're going to enter at point D, right? So just to confirm, if everybody's confused with regards to the candle closing, right? Let's say, for example, if you was to enter at this point here, point D, right, in between these 2 points, okay? And then price was to come down and close here, or if the candle was to come up here and close, okay? What you're wanting to do is you're wanting to adjust your placements accordingly. So your entry and your stop loss and your target points, right? Because what we're doing with this last point at the point of entry is we're looking for price action between this point, right? So when I say the price action between this point, if I quickly switch to a lower time frame, I'm going to quickly show everybody what I mean. I believe this is a news wick. A very volatile news wick. Okay. There we go. Okay. So if everybody can see this here. So you have the 1 minute candle closed here, right? When we're looking for entries, I'm just going to mention this now. We are going to do a session a bit later on in the series regarding entry points, okay? So when you're looking for entries, ideally you're looking for a lower time frame entry. I did mention this in the previous session if you didn't catch it. However, we will be doing a full session on entries. It does require a full session. I couldn't do it with, side by side with explaining how a pattern works. So you could potentially get into this part here because you see the close of the candle between those 2 points, okay? The candle closes between these 2 values, these percentage points. So you do have a potential entry at this point, a sniper entry. So let's just switch back to the hour. So once we've entered the market, then what we're looking to do is place our stop loss and our take profit points. Just so I know that everybody's paying attention, to start off with, where will we be placing our target points? So which values are we placing our target points? So TP1 and TP2. TP1, we are going to be placing at point B, okay? Yeah. And then TP2, we're going to be placing at point A, okay? TP1 for B, TP2 for A, okay? As you can see here, the pattern itself played out really well. We actually hit TP1 here. We hit TP1, and then we hit TP2. Okay, so this was a really good pattern. Personally, I believe this was a news candle. Okay, so this wick, this long wick, it was it looks like a very volatile move in the market. Personally, I probably would not have got into this. However, you know, there are instances where you can enter into a pattern with, you know, just a normal candle with not much volatility and, you know, without news hitting at that point. And, you know, you should never be entering a trade when news is about to, you know, be announced. Not only for, you know, geometric patterns, but for any type of, you know, strategy that you use, you should never be entering the market at that point. So this played out very good. This trade, it played out, you know, quite well. So what we're going to do now is we're going to quickly move into Manara, and we're going to be looking for a live pattern. Okay, so I'm just going to quickly come on to Manara, and we're going to look for a live pattern. So let me just correct the settings on here and see if we have a good setup to take. So that's been completed already. This pattern right here. So what I like to do, guys, is I like to find the pattern themselves on the monitor section. And what I'll do is I'll take odd USD and I'll come to the chart and I will type in odd USD. Owanda we're looking for. There it is. Let's change to the hour. Let's delete that. Okay. So we are looking for put that on. Sorry, bear with me 1 second. Grab 4 hours. Let's go back to that. So 4-hour pattern. Okay. We're going to delete this zone right here. We don't need this. Perfect. So the good thing about the Manara software, the really good thing about it is you can come on here, on this point here, and you can click on support and resistance zones. Just from looking at this, where does everybody think, you know, potential entries could be on this pattern? If you could just type it in the chat, if anybody has any potential entry points. Of course, it's at point D, but right now we've moved past point D. So where does everybody think we should enter on this pattern? Does anybody have any potential entry points? Me personally, I'm looking at this support zone right here. But what I'll also do is I'll go back. I'll look to the left, right? The reason I'm looking at this left point here is because I'm looking at previous price action. I'm looking at previous zones which have, you know, previous support zones which have pushed the market up. Okay, so if we look to the left here, we can see potential zones over on this side. So we can see here that price, where price is now, there's the support zone. So let's just look at this support zone and try to identify where we could potentially enter this market, right? So you've got a higher high, a higher low here, sorry. You've got a higher low here as well, right? And you've got a few rejection points here. Okay, so this support zone was a previous resistance, right? So you can see here that price has broken through here, it's retested, and it's, you know, it's dropped. Okay, so potentially this is a potential entry point here. What I would do personally is I would mark up a zone. I would look for an impulsive move to the upside. Okay, what I will then do at this point of finding an impulsive move to the upside, I would then look at the previous candle right here. Okay, and at that point I would use something called a parallel channel, which I would then draw onto the chart here. Okay, so I would use the candle itself, the previous bearish candle, and again I'll go into entry points in a lot more detail in a different sort of video, but right now I'm just going to briefly show everyone how I would look for an entry point. So now that we found this candle, this impulsive move, okay, we can then look for, if anybody was on my last session, at this point here, now that we've got a POI, which is a point of interest, what are we looking for at this point of interest? What type of indications are we looking for in order to take this trade and to you know, follow the market up to our TP1 and TP2? So we're looking for bullish moves, but any particular type of bullish moves, any particular type of candles, any particular thing with structure. Okay, so what we're looking for within this POI in particular is we're looking for a break of structure, right? We're looking for a change of character. Now, with a change of character, to put it simply, for a bullish move, right? So that's what we're looking for. This is a bullish pattern. What we're looking for is initially we're looking for a break of the low, right? And then a break of the high. Okay, so let's draw that up. Let's say, for example, let's take these 2 points. Okay, these are very good points. So let's draw this up so everybody understands it a bit better. So let's say for example, this point is a low point right here. Okay, I'm actually going to use a different tool for this for demonstration. Let's just use the rectangle pattern. So this is one of the points. That's the low that we're going to be looking at. Okay, so that's the low, and then we also have the high here, right? What we're looking for price to do, we are looking for price to just trying to find a particular tool to help explain this. Okay, never mind. We're looking for price right here to break the low. Okay, break the low. Second, just change that. So we're looking for price to break the low here, right? And then I'm gonna make this green. Actually, I'm gonna keep it red. And then we're looking for price to break the high, right? So I'm going to make this one green. And then, so I'm going to point out these, I'm just going to put these lines here. So this is the break of the low right there. Make these blue so everybody can see them. And then you've got a break of the high right here. Okay. So this right here is a change of character. Okay. This right here is a change of character because let me just explain it quickly to everyone. So right here, we've got a lower high, lower high, lower high, lower high, right? We've got a lower low, lower low, lower low, and then lower low here, right? If price then breaks that low and then breaks the high, we've then established a new structure in the market, a new sort of trend in the market, right? Because it's broken that previous high. None of these high points have broken the previous point, okay? High point, none of them, because they're all lower highs, right? So in order for there to be a change of character, we need to break the structure, which is this point here. But that's not it, right? This is not our entry point. This right here is not entry. It doesn't mean enter the market, okay? What we're then doing is we're looking at the break, okay? We're looking at this break here. And what we're going to wait for, we're going to wait for price to then come back to us, okay? We're going to wait for price to come back to us at this point to retrace to that lower low. That this is where we enter the market and take the market all the way back up to our TPs, okay? And again, I will go into POIs. I will go into a change of characters. I will go into all of that entry points in another session. Can I just quickly ask everybody? We can see here we have now I didn't click onto this until a lot later on into my trading career for geometric patterns and entering geometric patterns. Right here we have a crab pattern, right? It's a bullish crab pattern. Can anybody see any other type of alternative pattern on this graph? If anybody could type it in the chat. Can anybody see any alternative pattern on this graph right now? And I'll give everybody a hint. It's nothing to do with the price action that's already been written. It's actually to do with the markups that I've made. Can anybody see within the markup that I've made? I don't know if anybody can see it. I'm just trying to adjust this. Can anybody see within this pattern? Does anybody know what this pattern's called, this alternative pattern? If anybody could put it in the chat. So this pattern right here, you can see. Double bottom, perfect. It's a double bottom, and a double bottom, you know, the entry point is you know, it just goes to show that there's patterns forming to help with that entry, right? There's many patterns that would form in a change of character. There's many other patterns that can form in a change of character. But if if anybody got any value from today's session, if we could just put some fire emojis in the chat, that would be perfect. Then I'll know that, you know, okay, perfect. Next session we're definitely we're gonna be going into some more patterns. I hope everybody took notes. If you didn't take any notes, definitely go back to the sessions on the YouTube channel. What I'm going to do right now is I'm just going to quickly post the YouTube channel into the chat. So just going to quickly post that now. Just bear with me 1 second while I grab the link. And I'm actually looking forward to our next sessions. Most importantly, I will be looking forward to going into entry points. Going into entry points will, you know, it's going to be at another level. I can say that, and we're going to learn. So, you know, all of this is going to make sense, and we're going to go into so much more detail, and we're just going to smash it in the markets. We're going to, you know, hopefully make a lot of money, and, you know, create a lot of success from this session. So there's the first link. That is for the market geometry sessions on the YouTube channel. I'm just going to grab the second link now. These are links to playlists for the sessions that we post on here. And yeah, so let me just share this one as well. If anybody doesn't understand anything, you know, if it completely went over your head and you didn't understand today's session, just feel free to reach out. We do have the market geometry chat again. I can post that in the chat if someone missed it. We do have the Telegram for the market geometry. If you do see any patterns in the market later on this week or today, feel free to screenshot them and post them. That would be amazing. And yeah, it's been a pleasure, you know, presenting and delivering this, you know, all these patterns and information to everyone, and, you know, help everybody has a good end to the week trading. And yeah, it's been good. It's been good. Thank you, guys. I appreciate you all joining and taking time out of your day. And I hope you all have an amazing evening. So I'll catch you all in the next session.